Welcome to ZICA Academy YouTube channel. In this lecture, I want to examine accounting for local government under cash basis IPSAS. If you are coming across my lecture for the first time, please like the video and also share it with others. If you are a returning subscriber, I say thank you for being part of this channel. Local government is the third tier of government in Nigeria. It therefore have three major sources of revenue. So we want to look at the sources of revenue of the local government. Sources of revenue of local government. Sources of revenue of local government. The source of revenue of local government can be categorized into three. Number one, we have statutory source of revenue. Statutory. Number one, statutory source of revenue. Number two, we have permissive sources of revenue. And the third one is incidental sources of revenue. So I am starting with statutory source of revenue of the local government. Statutory source of revenue include, number one, we have statutory allocation from federation accounts. Statutory allocation from federation accounts. We also have 10% of state internally generated revenue. 10% of the state internally generated revenue. Number three, we have fees and other charges imposed by the council. Fees and other charges imposed by the council. Fees and other charges imposed by the council under the instrument of creation and acts of the legislative promulgated from time to time. Fees and other charges imposed by the council under the instrument of creation and acts of the legislative promulgated from time to time. These are revenue under statutory source of revenue of the local government. The second source of revenue is permissive source. Permissive source of revenue. Permissive source of revenue. These are taxes and levies that can be collected by the local government council. Permissive source of revenue. The revenue under this head are the taxes and levies that can be collected by the local government council. Example of this includes one, shop and kiosk rates. Shop and kiosk rates. That is number one. Number two, we have tenement rates. Tenement rates. Number three, we have on and off liquor fees. On and off liquor fees. Number four, we have slaughter slab fees. Slaughter slab fees. Number five, we have marriage, birth, and death registration fees. Marriage, death, and birth registration fees. Number 6, we have motor park levies. Motor park levies. Number 7, we have domestic animals license fees. Domestic animals license fees. Number 8, we have signboard and advertisement permit fees. Signboard and advertisement permit fees. Number 9, we have religious places establishment permit fees. Religious places establishment permit fees. Number 10, we have customary burial ground permit fees. Customary burial ground permit fees. 11, we have sewage and refuse disposal fees. Sewage and refuse disposal fees. Number 12, we have wrong parking charges. Wrong parking charges. Number 13, we have merriment and road closure levies. Merriment and road closure levies. These are examples of revenue that fall under permissive source of revenue of the local government. Then number 3, we have incidental source of revenue. Incidental source of revenue. Revenue under this source or under this head includes donations. Then we have proceeds from economic project undertaking. Proceeds from economic project undertaking. Proceeds from economic projects undertaking. Proceeds from economic projects undertaking. Then we have grants from federal or state government. Grants from federal or state government. Grants from federal or state government. We have investment income. Investment income, such as dividend received and interest received. Dividend and interest received. These are incidental source of revenue of the local government. Expenditure incurred by the local government council will be categorized into 2. Expenditure incurred by the local government council will be categorized into 2. Number 1, we have recurrent expenditure. Recurrent expenditure. By recurrent expenditure, we mean the expenditure incurred on the day-to-day activities of the local government. Expenditure incurred on the day-to-day activities of the local government. Example of this include personnel cost. Personnel cost. Personnel costs. Then 2, we have general overheads. General overheads. Personnel costs and general overheads. The general overheads include maintenance and repairs, maintenance and repairs costs. Then we also have petrol costs, expenditure incurred on rent, electricity and water bills. All these are recurrent expenditure, so they fall under general overheads. Then the second category is capital expenditure. Capital expenditure. These are expenditure incurred on capital projects. Expenditure incurred on capital projects such as construction of roads, construction of motor parks, construction of toilet facilities, purchase of motor vehicles or motor vans, etc. Expenditure incurred on capital projects, we refer to them as capital expenditure. The expenditure of the local government must be classified into main heads and appropriate subheads. They must be classified into main heads and appropriate subheads. What are the accounts required? Accounts required. Under cash basis IPSAS. The following accounts shall be required under cash basis IPSAS. Number one, we have statement number one. Statement number one. Statement number one is cash flows statement. Cash flow statement. That is statement number one. Then we have statement number two. Statement number two. Statement number two, which is statement of assets. Statement of assets and liabilities. This is the statement of financial position of the local government. Then number three, statement number three. This is statement of revenue and expenditure. Statement of revenue and expenditure. That is statement number three. Statement number four is the statement, the number four accounts of the local government is the declaration of responsibility for the financial statements by the treasurer of the local government council, stating among others matters that the financial statements have been prepared in accordance with the provision of the Finance Control and Management Act. State declaration of responsibility for the financial statements by the treasurer of the local government council, stating among other matters that the financial statement have been prepared in accordance with the provision of the Finance Control and Management Act. Then the fifth account, the number five, is the Auditor General certification, stating in his opinion whether or not the financial statement presents a true and fair view of the financial position and operation of the local government council as at and for the year ended December 31st, 20XX. So these are the accounts required for the local government council. So I want to start with these two accounts. statement of cash flows is the same with the one I've examined under IPSAS 1. The only areas of difference is that the items of revenue of local government and expenditure may differ from the revenue and expenditure I've considered under that. So if you are used to the revenue and expenditure I've examined under this, so the preparation of cash flow statement for local government is not different from what I have examined under IPSAS 1. I will advise you go back to my lecture on IPSAS 1 for better understanding. So in this lecture, I'll be focusing on statement number 2 and statement number 3. Statement of assets and liabilities and statement of revenue and expenditure of the local government. Statement number 2. I've told you that statement number 2 is the statement of assets and liabilities of the local government. So we have statement of assets and liabilities as at December 31st, 20XX. I've told you that statement of assets and liabilities is the same as the statement of financial position. So you will have a column for current year and previous year. So you have notes, current year and previous year. Amount in naira. So the first item to start with are the assets of the local government. Remember, this is cash basis, IPSAS. So you start with liquid assets. Liquid assets. Liquid assets are assets that are readily convertible to cash. So example includes cash and bank balances. So we have cash and bank balances. Cash and bank balances. So for current year and for the previous year. The notes used to ascertain that amount will be there. So after this, you have the total liquid assets. Total liquid assets. After liquid assets, then you consider investment and other cash assets. Investment and other cash assets. Investment and other cash assets. This include investment. So investment made by the local government, investment. Then you may also have advances of the local government. Advances. Then you may have orders. Then you sum them up. You have the total investment and other cash assets. Total investment and other cash assets. Total investment and other cash assets. Then you add the liquid assets and investment and other cash assets. Then you arrive at total assets. Total assets. After total assets, then you deal with liabilities. Liabilities will be the next item to deal with. The liability includes general public funds. General public funds. So this will include the general revenue balance. The revenue balance, the balance you have, you will get it from the statement number 3, which I will examine later. General revenue balance. After general revenue balance, you consider external and internal loans. External and internal loans. External and internal loans. So under this heading, you may have external loans, external and internal loans. External and internal loans. You may have deposit liabilities. Deposit liabilities. Deposit liabilities. Then you may have loans. Another loans you have. So you consider them. Then you have total liabilities. Total liabilities. This is the format for statement number 2. That is statement of assets and liabilities of the local government. Statement number 3, which is statement of revenue and expenditure. For the year ended December 31st, 20XX. So you start with, so you have a column for variance. You have a column for current year, actual. Then you also have a current year budget. So you compare the budget with actual to get the variance. Then you have the heads. Then we have description. So you start with revenue. So the first revenue head might include rates. For the current year budget, the current year actual, then you establish variance and you quantify that variance in percentage. And if you don't want to quantify it to percentage, you may quantify the variance in value by just finding the difference between this and this. Then we have fines, fees, and licenses. Let me have the second head. Fines, fees, and licenses. Then you may also have earnings and sales. The revenue head, earnings and sales. Earnings and sales. Then you might equally have interest and dividend. Or let me have rent of government property. Rent of government property. Rent of government property. Then we have interest and dividends, the revenue head. interest and dividends. Then you may have taxes, the head. Taxes, you may equally have statutory allocation. Statutory allocation. Statutory allocation. Then you may have miscellaneous. Miscellaneous. Then you sum them up. So that is total revenue. After revenue, you consider the expenditure. Expenditure. Expenditure might include general administration. General administration. Expenditure incurred on general administration. Expenditure on health and environment. Health and environment. Then expenditure incurred on works and housing. Health, works, and housing. Then expenditure on education. Education. Expenditure incurred on agric and social development. Agriculture and social development. Expenditure on grants and subsidies. Grants and subsidies. Expenditure on capital projects. Capital projects. Then miscellaneous expenditure. Miscellaneous. So you sum up all the expenditure, you have the total expenditure. Total expenditures. Let me have that as B. If the total revenue is A. You subtract the total expenditure from total revenue, you get the surplus, which is A minus B. Then you have your opening balance, which is general revenue balance. General revenue balance brought forward. The revenue has. Then you have general revenue balance carried forward. This general revenue balance will be transferred to the statement of assets and liabilities. Remember, I've told you statement of revenue and expenditure is a statement that shows the performance of the local government entity. It is prepared to ascertain the general revenue balance or surplus is the equivalent of statement of profit or loss of a business entity. Example, the following information is extracted from the books of Ajelogo local government for the year ended 31st December 2012. 1. Assets and liabilities as at 31st December 2012. We have tangible assets 16 million naira, investments 6 million, advances 3.9 million, cash at bank 1,432,400, cash in hand 185,960, deposit liabilities 13,608,000, deposits for land 4 million, deposits for motor vehicles 11 million. 2. Stated below are the revenue and expenditure for the year. We have head discretion amounts. Head 2004, we have personnel department 28,410,200. Head 2005, finance department is 43,100,200. Head 1003, local licenses fees are 13,256,310. Head 1005, rent on local government property 13,100,600. Head 1001, taxes 38,141,100. Head 1006, interest and dividends 1.3 million. Head 2001, we have office of the chairman 66,964,700. Head 2006, educational department 44,345,900. Head 2003, the council 39,180,800. Head 1009, statutory allocation 495,011,830. Head 1002, race 23,048,300. Head 1007, other grants 136,181,230. Head 2008, agriculture and water resources 42,344,200. Head 1004, we have commercial undertakings 24,613,620. Head 2002, office of the secretary 33,624,180. Head 2007, primary health care department 37,618,790. Head 1008, miscellaneous receipts, that is 6,125,380. Head 2009, works and housing department, that amounted to 46,125,380. Head 2010, commerce and industry 38,648,740. Head 2013, other charges 11,400,380. Head 2012, miscellaneous 21,867,080. Head 4,000, capital expenditure 262,600,000. Head 2011, traditional office 14,858,160. Note 3. General revenue balance brought forward on 1st of January 2012 was 8,420,700. 4. The code in use is 1. As prefix for revenue and 2. As a prefix for expenditure. You are required to prepare A. Statement of revenue and expenditure for the year ended 31st December 2012. B. Statement of financial position as at that date. Now let's have the solution to the question. Solution. The name of the local government is Ajelogo local government. Let's have Ajelogo local government. In requirement A, you have to prepare the statement of revenue and expenditure. So now let's have statement of revenue and expenditure for the year ended. And the year end of the entity is December 31st, 2012. December 31st, 2012. So we have naira. We have head, then description, and amount in naira. So we are starting with items of revenue. We have revenue for the year. Remember, you were told the prefix for revenue starts with 1. So back to the question. These are assets and liabilities. If we were told in note 1, assets and liabilities as at December 2012. These are assets and liabilities. Then note 2, stated below are the revenue and expenditure for the year. Now, remember the revenue head. The prefix for revenue starts with 1, as you were told in note 4, that the code in use is 1 as prefix for revenue. So this is not revenue, this is expenditure. And this is also expenditure. Head 1003 is a revenue. But let's arrange them in ascending order. So we have 1001. 1001 will be the first revenue head. And that is taxes. And that amounted to 38,141,100. So now let's have head 1001. Back to the solution. Head 1001. And that is taxes. And it amounted to 38,141,100. 38,141,100. So these have been considered. Then the next code, let's check if we have 1002. So we have 1002, which is rates. And that amounted to 23,048,300. So rates, 1002. 1002. And that is rates. It amounted to 23,848,300. 848,300. Back to the question. The rates have been considered. Then after 1002, then we have 1003, which is local licenses, fees, and fines. That amounted to 13,256,310. 13,256,310. That is head 1003. Head 1003. Head 1003 is for local licenses, fees and fines. And that amounted to 13,256,310. 256,310. Back to the question. Let's check if you haven't considered head 1003. Let's check if we have head 1004. This is 1005. 1005. 1004. We have 1004, which is for commercial undertakings. 24,613,620. So head 1004. 1004, which is for commercial undertakings. Commercial undertakings. And that amounted to 24,613,620. After head 1004, so we have head 1005, which is rent on local government property, 13,100,600. Head 1005, 1005, rent of local government property, and that amounted to 13,100,600. Back to the question, we have head 1006, interest and dividends 1.3 million. Head 1006, interest and dividends 1.3 million. Back to the question. Then we also have head 1007, which is for other grants, and that amounted to 136,181,230. Other grants, which is head 1007, other grants, and that amounted to 136,181,230. That is head 1007. Then do we have head 1008? This is head 1009. So head 1008, which is a miscellaneous receipts. Miscellaneous receipts of 6,125,380. Miscellaneous receipts, that is head 1008. Miscellaneous receipts. And that amounted to 6,125,380. 6,125,380. That is head 1008. Then we have head 1009, which is a statutory allocation for 95,000 and 11,830. Head 1009, statutory allocation. 1009, statutory allocation. Statutory allocation for 95 million, 11,000, for 95 million and 11,830. So that is head 1009. Do we have head 1010? Head 1010. Head 1004 have been used. 1008 have been used. So there is no head 1010. Let's sum up our revenue. 38,141,100 plus 23,848,300 plus 13,256,310 plus 24,613,620 plus 30,100,600 plus 1.3 million plus 136,181,230 plus 6,125,380 plus 495 million and 11,830. Total revenue amounted to 751,578,370. That is our total revenue. So now we have total revenue 751 million 578,370. Now, let me have that as A. After total revenue, the next item is expenditure. Expenditure. So we want to consider the expenditure now. So back to the question. So the first expenditure here we have 2004, 2005. Let's check if we have 2000 or 2001. We have 2001 here, 2001. So the first code is 2001. So we have 2001. Office of the Chairman, 66,964,700. 2001. Office of the Chairman. And that amounted to 66,964,700. Head 2002, Office of the Secretary. And that amounted to 33,624,180. Head 2002, 2002. Office of the Secretary. Office of the Secretary. And that amounted to 33,624,180. Head 2003. Head 2003. We have the council, 39,180,800. Head 2003. The council. And that amounted to 39,180,800. Then let's check for 2004. Head 2004, and that is personnel department, 28,410,200. Head 2004, personnel department, 28,410,200. After head 2004, we currently have head 2005, which is finance department. That is 43,100,200. Head 2005, finance department. Finance department, and that amounted to 43,100,200. After head 2005, we have head 2006, which is education department, and that amounted to 44,345,900. Head 2006, education department, and that amounted to 44,345,900. Head 2007, we have primary health care department, and that amounted to 37,618,790. Head 2007, primary health care department. Primary health care department, and that amounted to 37,618,790. Back to the question, we have head 2008, which is agriculture and water resources. That amounted to 42,344,200. 2008, agriculture and water resources of 42,344,200. Then we have head 2009, which is Works and Housing Department, 46,125,380. Head 2009, Works and Housing Department, and that amounted to Works and Housing Department 46,125,380. Back to the question. We have head 2010, which is Commerce and Industry, 38,648,740. Head 2010 for Commerce and Industry of 38,648,740. We have head 2011, which is Traditional Office, and that amounted to 14,858,160. Head 2011, Traditional Office, and that amounted to 14,858,160. Then head 2012, which is Miscellaneous, and that amounted to 21,867,080. Head 2012, Miscellaneous, Miscellaneous of 21,867,080. Then that is head 2012. Then head 2013, we have other charges, 11,400,380. Head 2013, other charges amounted to 11,400,380. Then head 4,000, that is capital expenditure. Head 4,000, which is for the capital expenditure. And the capital expenditure amounted to 262,600,000. 262,600,000. So, Note 3 is the general revenue balance brought forward on 1st of January 2012. So, and Note 4 is all about the code. So, those are the items of expenditure we have. Let's sum them up to get the total expenditure. Total expenditure. So, we have 66,964,700 plus 33,624,180 plus 39,180,800 plus 28,410,200 plus 43,100,200 plus 44,345,900 plus 37,618,790 plus 42,344,200 plus 46,125,380 plus 38,648,740 plus 14,858,160 plus 21,867,080 plus 11,400,380 plus 262,600,000. So the total expenditure is 731,088,710. That is the total expenditure. Let's have that as B. Total revenue of 751,578,370 minus the total expenditure of 731,088,710. So we have the surplus of 20,489,660. Back to note 3. You were told that general revenue balance brought forward on 1st of January 2012 was 8,420,700. So now let's have general revenue balance brought forward, and that is 8,420,700. So if you add that, if you add the two items together, plus 8,420,700. So we have 28,910,360. That is general revenue balance carried forward. That is the statement of revenue and expenditure account. B, you are to prepare the statement of financial position as at that date. And the statement of financial position is the same as the statement of assets and liability, which is statement number 2. B, we have AJ logo, local government. AJ logo, local government. Statement of financial position as at December 31st, 2012. So you start with assets. You start with liquid assets. Liquid assets. And what are the liquid assets we have in the question? Liquid assets we have include cash at bank, 1,432,400. Cash at bank, 1,432,400. Then we also have cash in hand, 185,960. Cash in hand, 185,960. So when you sum up that, 1,432,400 plus 185,960. So that is total 1,618,360. That is the total liquid assets. The next asset to consider is investment and other cash assets. Other cash assets. So we have investment 6 million. Investment 6 million. Then we have advances 3.9 million. Advances 3.9 million. We've considered cash. This is liability. Deposit for land 4 million. Deposit for land 4 million. Then we also have deposit for motor vehicles 11 million. Deposit for motor vehicles 11 million. Then we have tangible assets 16 million. Tangible assets 60 million. If you add this 6 million plus 3.9 million, that is 9.9 million, plus 4 million plus this is 15 million, plus 16 million. So we have 40.9 million. 40.9 million. That is total investment and other cash assets. Total investment and other cash assets. So if you add this and the liquid asset plus 1,618,360. 1,618,360. That will give us 42,518,360. That is total assets. Total assets. We now have financed by, we have deposit liabilities 13,608,000. Deposit liabilities 13,608,000. Then from our statement of revenue and expenditure, we got general revenue balance of 28,910,360. So general revenue balance. General revenue balance 28,910,360. So now let's sum them up. 30,608,000 plus 28,910,360, and that is totaled 42,518,360. This agree with the total assets. This marks the end of the solution to the question. Please drop the love emoji. Also share the video with others. Thanks for watching ACCA.